Hi there, Serial Trader here. It's been quite a while since my last upload, but I figured I'd give it a shot here. I've been quite busy, not just with trading, but with other things as well. So I won't be uploading often or anything, but I guess whenever I feel like it. And maybe I'll switch to something more easily done, like live streaming, just casually, during the market day, if I see something interesting going on or whatever. But we'll see. Okay, so let's look at SPX to begin things off here. And I think the last time I did a video might have been in June or something like that. I'd have to check. But so I'll just point out that the idea that I think I was working before, that this was a, now we're talking off the March 2020 low here on SPX. So we had the 1, the 2, this was all of the 3. And we were going to do perhaps an unusually deep 4, or deep and long-lasting 4, and then go up in 5. Well, that is now officially dead, because not only is this disproportionately long in both price and time, or severe in both price and time compared to the wave 2, and also compared to the overall sequence off that March 2020 bottom, but we also have overlap with what you would call the wave 1 in this sequence, right? Clear overlap. I think even on a, I don't know if it's on a closing basis that we have overlap, but I think it's not on a closing basis, but still, to me, that is a clear overlap, especially given the magnitude of the decline in both price and time. So I think we can safely say that we completed all of a 5-wave sequence off that March 2020 low there at that January 2022 high. And we've been correcting so far what looks like a partial retracement of this impulse off that March 2020 low. Now this could morph in, it still could morph into something more, menacing that will go down and take out those March 2020 lows, but so far it doesn't look like that to me. It looks more corrective, okay? I mean, it's been over a year, and okay, we've retraced, it's probably close to a 50% retracement. Yeah, right around a 50% retracement of that overall sequence. So that's really not that bad. That's actually kind of a normal retracement level. You might even call it somewhat mild. You can go to a 618 or even a 786 often enough on at least smaller time frames. Seems to happen all the time, right? So far we've only done a 50% retracement. And this might really be the low. I'm not sold on that, but it could be. So if we go into, I don't know, we'll stay on the weekly here for now. Let's get rid of that. If we examine the price action off the top, there's different ways to look at it here, unfortunately, which makes things lower confidence, I guess. But you could say that we did a ABC for W. This was an X wave. Let's see here. This would be, I suppose, ABC for a Y. And that's just a, completed double zigzag correction. And if we put on a trend channel, let's try and dial this in here. Parallel trend channel. We're kind of right up against that trend channel, haven't actually broken out above it, and it looks like we're not going to here. So there's this possibility that we've got a double zigzag complete. This was our initial impulse. We're doing a partial retracement of that impulse. I'll go on the daily time frame for more details on that soon here. But and then we're going to start our new uptrend after setting a higher low here. But there's also the distinct possibility that we're going to do this and do a double zigzag. Okay, depends where you want to put it. I mean, you can call that the Y, that the X, and this like an A, B, C down for the Z or the Z, whichever one you like there. Or you could go, this was the Y, this was the X, and we're going to do the Z or the Z like this. Doesn't really matter that much, honestly. Now, some things to point out on the RSI here, and this is on the weekly, so it's fairly significant. We had a bullish divergence. Well, we still have it, really, where we're making lower lows in price, but a higher low in RSI. So that's what you definitely want to be seeing, especially on a large time frame, if you're trying to work a major bottom. So that's kind of a positive situation there, at least. Bullish divergence. Delete that. Now let's just delete this channel. Now, I guess I'll point out one more thing too. If we go on to the super bear count, okay, and basically you would have to say, you know, we have like a 1. It's difficult to call this an impulse, but okay, let's just pretend it is. Some people try to work it that it is a 1, 2, and then you know, major downside potential. Basically, you have to work that we have multiple degrees of 1s and 2s here. Okay, like 1, 2, 1, 2, 1, 2, 1, 2, wave 3 of 3 of 3 of 3, you know, to the downside to come, major crash. I mean, for that to kind of be enforced here, we got to start tanking, and I mean tanking, and aggressively, relentlessly, like worse even, or at least as bad as we did in the you know, the COVID crash there in early 2020. We need to do that, and pretty soon, and just relentlessly down, and obviously take out that low for this not to just be a corrective internal retracement of this overall impulse that we did off that March 2020 low. So that could happen, I suppose, but I'm really not sold on that being the case. To me, that's like the least likely scenario of the ones I've gone over here. So let's go to the daily chart. Now, I don't love the action off the bottom here so far in October of 22 is so far the bottom, currently the bottom. But you can actually, you know, reason your way into this being a 5-wave move off the bottom or a 3-wave move. And I wouldn't really argue against either one because they're both valid. So that's not that helpful, because we can't have the high confidence that, oh yeah, we got a 5-wave move off the low, expecting a 3-wave partial retracement and then another 5-wave move up. We can't say that yet. And we also can't say with absolute confidence, hey, we have a 3-wave move up, we're expecting another impulse wave down to new lows. Both are valid and both could happen, which isn't really good information from a trading perspective. But what I do think we have that we can work with here from a trading aspect is this kind of from here, from the December high to kind of where we currently are. I think we got something to work with, okay? So this looks like an impulse wave down to me. It could be an A, this could be the B, and we could be working a C down, okay, for what might just be a partial retracement of this move that we've had off the October low. And you can see we've already gotten to the 50% retracement level. Perhaps we go down and tag the 618 or just do a double bottom or go deeper to the 786. It's anyone's guess at this stage, right? And I mean, I'll just, to humor this, I suppose, put this up here. That's the 1, 2, maybe that's 3, 1, 2, 3, 4, and the boy, that's tough. 5. Actually, maybe we would do this. That would be a 3. Then we go A, B, C, expanded flat wave 4. That's a little more palatable for me. And did we actually have 4-1 overlap there? No, we did not. So that works. Okay. So you can get 5, you know, non-overlapping waves up, and it doesn't break any rules or guidelines really. Wave 1 is the extended wave. Wave 3 is shorter than 1, and then wave 5 is shorter than 3. Wave 4 and 1 don't overlap. So you could work this as the initial impulse wave off the low. Now I could also count this as a complex corrective wave up, but let's just forget about that for now. So what I think we're currently doing is this looks like an impulse down for possibly an A. This looks like a corrective up for a B. And I think we did a fairly deep retracement. Almost a 786 here on the SPX. I think it was closer to a 618 on the NASDAQ, slightly exceeded, but same idea. And then today we did a nice bearish engulfing candlestick, engulfing 1, 2, 3, 4 prior real bodies. So that's a powerful candlestick reversal signal, and I think a good sign that this proposed wave C is now begun. Okay, so we'll go back to the bars. So what do we get for targets? Well, if this is just going to be an ABC, we'd probably be looking for around that equality level, which is not so far from the 618. So let's call it, high 36s to low 37s for a possible C wave. Okay. So from the current level, I'm just talking purely from like a trade setup aspect. Like if we just went short even here, okay, like say on the, I'd be using the futures. Actually, I am short some futures, by the way, full disclosure. But if you're going to just go short right here, okay, like say you literally entered at today's close or around there, your target's down here for the equality move. Okay, this isn't terrible. It's about a 3-to-1 risk-reward ratio, even at this current entry. If we get a little bounce up tomorrow, which is certainly possible, you might be able to get a slightly better risk-reward ratio. Obviously, your stop is the high of today, the high of the reversal bar, right? And your target is down here around that AC equality level. So not a bad trade setup. In fact, an excellent technical trade setup right now even. So I just wanted to point that out. Now, if something more bearish is going on, and this isn't just an ABC down, right? Let's delete all this noise. Then we might be thinking, okay, we have multiple degrees of wave 1s and 2s on that higher time frame, and another 1, 2 on this time frame, and we're just about to get absolutely like slaughtered to the downside in a multi-degree wave 3 down. Again, I'm not sold on this, but if we really start tanking unusually strong and relentlessly, then you'll have to entertain the possibility that this is happening. Again, I don't currently think this is what's going to happen, but can't fully discount it. Now, back to the less severe scenario. So if we're just going to do an ABC, okay, so nice, at least shorter term trade opportunity, kind of a swing trade, looking for a multi-day, even, possibly multi-week move down. There's that. And then what if we do find support here and start turning back up? Well, in that case, that might be the low of this entire correction that we've had for over a year, and maybe we're just about to enter some huge bullish, market trend. Another big impulse wave up to new all-time highs and beyond. And in which case, this will be a great long entry opportunity down here, should it, set up the way we want it. So that's what I'm looking at here with SPX. I could go through the NASDAQ, but it's basically the same, directionally. It's the same. The patterns might be a little more nuanced and different, but they basically have the same message, okay? And the Dow actually looks, interestingly, let's see if I can get the Dow here. Oh, sure. Yeah, we'll go here. I don't know why it doesn't want me to use... Okay, that's not the Dow chart I want. Well, let's just go DJX. I know that works. It's just the Dow Jones Industrial Average, but the scale's, 1/10. So instead of 30,000 something, it's 300 something, but it's going to look the same. Okay. So on the Dow, I think there's actually a strong case. Let's go to the weekly chart. On the Dow, there's a strong case that we've completed our partial retracement. Okay, corrective partial retracement of the overall move off the 2020 lows, March 2020 lows, to our January 2022 highs. We didn't even hit the 50% retracement. I think closer to the 38.2, or maybe in between the two. Yeah, so kind of in between the 38.2 and the 50% retracement. So quite a mild retracement. Definitely looks corrective so far to me. And I think importantly, we ended with a 5-wave move down, or at least I certainly view this as a 5-wave move down, and now we've done a 5-wave move up, breaking above the origin of that 5-wave move down. So to me, this is a pretty high confidence low in place on the Dow. Okay, and now we are entering, you know, what I believe to be a partial ABC retracement on the Dow, and looking for something possibly like this. So again, probably a mild retracement between a 38.2 and 50% likely. And looks like, you know, we got the A wave down, the B wave up, and looking for that C wave down in the Dow as well, although a less severe move, because it seems to go up more when it goes up and go down less when it goes down. The NASDAQ is the opposite. It goes up less when the market goes up, goes down more when it goes down. And then the S&P is kind of in the middle, the more, I don't know what you call it, balanced index there. Anyway, Dow's looking pretty good. In fact, I would, you know, highly entertain a long if we come down here for a nice C wave and make a, you know, relatively marginal new low compared to what we made in December on the Dow here, December 2022. Okay, I just thought I'd point that out. Before I jump into the Thinkorswim charts, I will just do a quick look at crypto here, just Bitcoin and Ethereum actually. But it has implications for a lot of the other, you know, alts if you're interested in that. But to me, I just focus on the majors. It's good enough for me. So Bitcoin, still have not abandoned the idea that we got the 1, the 2, the 3, ABC expanded flat wave 4. And within that expanded flat wave 4, you need a 5-wave move down in C. I'm just doing this quickly, so I'm not labeling everything. But if you have any idea, you know, what I normally do, you should be able to follow along as far as Elliott wave nuances and that sort of thing. So we can definitely get 5 non-overlapping waves down for C of 4, okay? But I have issues with the way wave 5 of C looks, although it's hard to argue with this pretty, you know, strong reversal we've had recently. So whether wave 4 is already done and anchored here in November of 2022, it certainly could be, or if we have to just come down one more time, you know, marginal new lows. And I'll point out that the wave 4-1 overlap level on this chart is 13,764. We've still respected that, so this is still a valid non-overlapping 4th wave to our proposed 1 wave. So even if we came down for a marginal new low, there is still some wiggle room here to not have wave 4-1 overlap. But it's certainly possible that the low is already in, and we're already in the very early stages, which would actually make a fair bit of sense that, you know, Bitcoin possibly leads the market here up, since it's you know, the risk-on asset. Let me just clean this up a bit. So what we'd be looking for is a clear 1 up, 2, and then we'd be going for the 3, the 4, and the 5 up, and maybe, you know, get over 100,000 or so for wave 5 of this overall sequence. That's how I'm viewing this. So around 20,000 going over, you know, to 100 plus thousand. That's a pretty nice ride to take, even if you just get in here, or if you want to wait for more pattern development, that's fine too. Okay, so that's how I'm currently viewing Bitcoin. And amazingly, you know, my view hasn't really changed on it for like a year. I've just been of the opinion that we've been correcting this very strong wave 3, and now just looks fairly in the bag that it was a severe and long-lasting expanded flat wave 4 that may already be done. Okay, so that's Bitcoin. Ethereum, it actually is even easier to get around here from a pattern standpoint. So we got the 1, the 2, the 3. I'd say we got the A, B, C, or W, X, Y perhaps. Double 3 correction, where we have like a 3-wave move down, 3-wave move up, and another 3-wave move down. So a double 3 as opposed to a expanded flat. And the reason I think that is because, well, Ethereum's a little different. It actually bottomed in June of 2022. It held the June lows in October and November, unlike Bitcoin and unlike the broader market. So it's showing relative strength. And also, you know, off the lows, if we go on to the daily time frame, this really looks like a 5-wave move up. This looks like a choppy, long-lasting, albeit deep, but still partial retracement of that impulse wave off the June lows, and now looks like we're potentially breaking out of this corrective move that we've been in. I mean, no matter where you put the parallel trend channel, like we're breaking out of it, right? So if this was like an ABC for W, ABC for X, ABC for Y, or something like that, double zigzag correction, you know, wave 2, whatever you want to label it as, it really looks pretty convincing that we're getting out of that, although it could always turn into a triple zigzag, especially if we don't break above this resistance level here, which is, almost 1700, 1678. If we just fail right around current levels, we could have one more leg down to spike the lows here while still holding this June low and then finally get going, although it's looking less and less likely, honestly. Even if the overall markets have a decent retracement here soon, it looks like Bitcoin and Ethereum have quite a bit of room to cool off without making new lows. So their lows could already be secure. Yeah, I just thought I'd point that out, that Ethereum just looks a little different. It already has that initial 5-way move off the bottom, whereas Bitcoin did not. And it already held the lows where Bitcoin didn't. And, you know, eventually expecting them both to basically trend up to new highs, more or less in tandem. Although Ethereum will probably have a little more percentage movement, as it often does. It's smaller, too, which only stands to reason it can move more easily percentage-wise, because it just is smaller and basically always has been. And then, yeah, looking for Ethereum to go to, I don't know, maybe 10,000. You know, we can do some measurements, but it's still early to do that. So, yeah, looking pretty bullish on Ethereum, honestly, and that's a good sign for a lot of things. Good sign for overall risk on, good sign for Bitcoin as well. I look at all these things as kind of a linked object. They're not independent of one another. They definitely have correlations and implications. So there you go. All right, so that's what I wanted to say on Ethereum. So yeah, definitely, like if you're a longer term player, or if you're already in Ethereum and been holding through some pain, which you know, I can relate, I'd say add or hold on or whatever, because looks like we're going a lot higher eventually. And that's probably all I wanted to run through here on these charts. Now, if we go to Thinkorswim, so I just thought I'd point out some things I used to do on the normal routine. So daily candlestick chart, SPX. So yeah, nice bearish engulfing candlestick right around that 200-day moving average, which we've been you know, rejecting as resistance for quite some time here. Really, we might poke above it, but it doesn't seem to have any sustainability there. Overbought condition on the daily oscillator, now starting to come down off that overbought condition. Plenty of room to go down before it's oversold. Like, it's still literally just coming off the overbought condition, not even out of it yet. Close below the daily T line. So everything's kind of suggesting that we're going to have a nice leg down here. Now, the question is, will it be just to moderate new lows compared to this low? Or are we going to take out this low? Don't know yet, but first target is definitely going to be taking out the prior low here at 37.64. I won't look at the weekly because the week hasn't closed yet. Well, maybe I'll have a look from any previous weeks if there's anything worth noting. Not really. So depending where our week goes here, this could be a dark cloud cover or even a bearish engulfing candlestick if we close really weak on Friday. But not much else to remark on there. Oh yeah, I guess the 50-week moving average, simple moving average, that's been serving as good resistance, which I think is pretty close equivalent to the 200-day moving average. So that only makes sense. Okay, there's that. And what else? NASDAQ 100. Again, bearish engulfing candlestick today. We did about a little more than a 61.8% retracement, but basically rejecting nicely off that area. Overbought oscillator just starting to come off. So NASDAQ looking to take out that prior low as well. And the NASDAQ looks more likely that it could make a new low, although I wouldn't expect like a significant new low, but go spike the lows over here from October on the NASDAQ. To me, that looks more achievable than it does on the SPX and certainly on the DOW. But that would just mean the NASDAQ's overall pattern ended a little later, but I think they would all kind of trend up together after that, really. But perhaps the NASDAQ would just be a lagging index as opposed to a leading index if there's been like a real shift in, you know, what the market likes. But we'll see. Or the NASDAQ could reignite just with crypto there, since there's a pretty strong correlation with the NASDAQ and Bitcoin and all that. And perhaps the NASDAQ could just, you know, become a rip-roaring leader again and leave the other indices in the dust. We'll have to see how it plays out. But yeah, expecting the same thing here short term. I'll move down to take out the prior swing lows at least. Weekly chart here on the NASDAQ. Let's have a look. Okay. Not a whole lot to comment on there, so I won't even bother. Nothing standing out. I think the NASDAQ composite's basically in the same boat there. Yeah, it's basically the same as the NASDAQ 100, so I'm not going to bother. Dow Jones Industrial Average, definitely looking, again, nice looking impulse off that bottom from October. And I think we are just doing a partial retracement here in the Dow. Below these prior lows will be the minimum, and those will be the lows from December, just last month there. Okay, so that's the Dow. And what else? VIX. VIX is it's near the low end of its range, really well, certainly the range has been in during this whole corrective downtrend. It got, I think, might have made a new low for that range here around 18, and now we've, you know, popped up from there. Well, I'm not sure how much I put weight into a candlestick pattern on VIX, but VIX did a bullish engulfing candlestick pattern today. I guess that's complementary to the bearish engulfing on the actual indices. So looking for a little bit of a pop up here in VIX, but probably, unless things get really crazy, I would expect the VIX to just kind of stall out and slide back down. I wouldn't expect like a major move up in the VIX unless we are in that super bear, you know, multiple wave 3-degree to the downside move on the indexes, and I'm just not sold on that idea at all. But if the VIX goes crazy, then that's probably what's going to be happening there. Okay, now speaking of the VIX, something important to point out on the VIX VVIX tool. So we are on a sell signal currently. We have a nice, well, we developed a nice VIX VVIX divergence really before the market even topped and started breaking down here. So that's where we had lower lows in VVIX, and then relatively, higher lows in VVIX, and at the same time lower lows in the VIX here. So you can see VVIX bottomed way before the VIX and already started trending up while the VIX was still trending down. But now they both kind of linked up again. So we had that nice divergence between VIX and VVIX. Got above the red moving average on VVIX right here. And now we're actually confirmed on a sell signal by getting below the blue moving average on SPX. So this is also in alignment with the idea that we're currently in a nice swing move down. So I just want to point that out. Okay, well, that's probably good. And yeah, I'm not sure when I'll do another video. I'm very busy, but again, I'm toying with the idea of maybe just doing a live stream just casually, randomly during a trading day if I see something interesting, and that way I don't really have to do anything. I just hit the live stream button, do my thing, and then when it, you know, reaches its natural conclusion, I'll just end the stream, and there you go. You can even watch it later if you weren't around for the live stream. So I don't know, maybe comment if you think that's a decent idea or not, if you'd be interested in that. Wouldn't really cost me much as far as time or commitment, because I'm watching the markets anyways, typically during the day. So live streaming that process, it wouldn't be really much of a burden for me. All right, that should be good for now. Serial Trader signing off.